Bitcoin is absolutely starting to bounce. Does that mean it's about to just absolutely take off and break out of this channel? We got to look at Ethereum as well. We see this is doing very similar structured things. We see Avalanche trying to fight its way back into this parallel channel with many other coins as well. Having a little bit of resurgence here in the last 24 hours. Is this going to follow through? All this and more. We're about to break this down in about 3 minutes. So everybody hit that like button. Get involved in the live chat right now. We're going to get this going.
Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. Bitcoin, pump, altcoins, pump. I've been preparing for this. Can't nobody tell me nothing. SEC and its policies rely on whatever Gary thinks. Bitcoin's a flight to quality. I heard that from Larry Fink. Every hour losing purchasing power on food and shelter. It's not our fault. Blame the cult. It's the political cowards. When it comes to gas, our purchasing power just got cut in half. I sit back and laugh, open my bag, fill it with stacks and sats. Bitcoin, pumping, altcoins, pumping. I've been preparing for this. Can't tell me nothing.
And I believe crypto will play that type of role as a flight to quality. We are hearing from clients around the world.
Bitcoin, pumping, altcoins, pumping. I've been preparing for this.
And I believe crypto will play that type of role as
Bitcoin, pumping, altcoin, pumping.
we are hearing from clients around the world.
Can't nobody
It
tell
is
me
Saturday.
nothing.
Welcome to the stream, everybody. As you pour in, hit that like button. We're going to break down this bounce that we're seeing here right in the middle of the weekend. Is this going to be a bit of a fake out, or is this going to be the start of something big? Throw a 1 in the live chat if you're ready to dive into these charts. We've got a great interview as well with Mr. Crypto Birb that we're going to be covering also in this stream. So everybody, if you're ready, let's get that live chat popping. If you are here, if you're a member, drop in some emojis. Drop in the bull emojis. Let's summon the spirit of the bulls. Let's get this going. Good morning, good afternoon, good night. We're getting a little bit of that bounce on Bitcoin and altcoins right now. We're going to dive into it's Saturday. It is the middle of the weekend. I want everybody here right now to hit that like button, hit that subscribe button, ding the bell. Let me know in the live chat, how you doing? What are you doing this weekend? Do you spend most of your Saturdays looking at crypto content, or do you just pop in here and there? Let me know what you're doing. I'm going to get out of the house this afternoon. I'm going to a comedy show this evening. I'm really looking forward to that, but we got some things we got to talk about today. We got to talk about a little bit of this rally starting, but is it really? Let's just even look here on the right. Very simple TA on a brief overview. We're really just seeing price action sideways, price action sideways, price action sideways, all through all of these coins. So we got to talk about it. Is the rally coming to fruition right now? Are we looking to actually have that move to the upside? Well, let's get over here. Let's look at Bitcoin and just remind ourselves, what's the structure we are working with right now? I talked the last couple days, and I've been sharing in the BitLab Discord as well as here on the channel, but talking about this basically lower high, lower high, lower high, lower high, lower high, and then yet again, lower high. But one of the things we want to look for when we're asking ourselves, are we going to get a pop? Are we going to get that breakout? Is looking to the lows. Yes, we have lower lows all the way through until right here. We finally established a little bit of a higher low. The question's going to be on this movement to the upside here, what is to happen? So what we're really looking at is two very key levels. That is this level right in here, the $68,000 to $69,000 region. Essentially, if price does push up, we very well could get rejected and travel back down. So we want to pay attention to that. And similarly, if the price action does reject here, because we see we have rejected here multiple times, we want to, one, either hold this level right here at 62.7, 62.6, and more importantly, as a bull, if you're looking at the bullish possibilities, we definitely want to hold above the 61.3 because this is essentially the low of this range. Yes, we have a little bit of a wick down here, and we're going to talk about this right now. We're going to be diving into a couple of other things as well, but let's go ahead and get a little bit of a brief overview of what's going on. It's the weekend and there's things still cooking. We can see right here, European Union bans anonymous crypto transactions. We've got to pay attention to this. This is going to cause FUD in the space. Also speculation around if something like this is going to also come to the US or other countries. If they're going to try to put regulation that every wallet has to be registered, etc. Now, this effectively can not kill Bitcoin and crypto, but it definitely can throw some water on the bulls and, influence a little bit more of that sustained choppiness sideways, potentially even a little bit more downside price action. Now, with that being said, it's okay because we've looked at this over and over and over again, and we know that price action all the way down to here is ultimately still very bullish if we hold above this $54,000, $55,000 region. And this is because when we come into, I don't need to pull it up. You guys have seen it 1,000 times. Short-term holder cost basis is effectively a great metric for when you're playing, when you're in a bullish narrative or you're entering a potentially bearish or sustained bearish narrative once we lose this level. And especially once you lose a level, come back and test the level and get rejected and go back down. That is going to mark a lot more bearishness if that were to happen. I don't see that happening right now for any particular reason right now. So any price action within this, ultimately I am a net buyer because think, we were just at $74,000. We're down almost $10,000 from what our highs were. This is opportunity. Let's celebrate opportunity here in the market. This is exciting because if we come here we are on the 1 hour. If we look at this on the 1 hour chart, we have had a little bit of a move to the upside. But currently, we've not only broken above this range low. Look at this. We're right in that box. We also currently are being held not only by this horizontal previous range low, but also this diagonal level of resistance that is 1, 2, 3, 4. Now we're on the 5th attempt here. Are we going to break to the upside or are we going to get rejected and come back down? I'm curious, everybody that is here in the live chat right now, and if you're watching later, drop the comment down below. Do you think this is the rebound where we break out of this range to the upside? Or do you think we're going to get rejected to the downside here? Let me know what you're thinking. Let me know what you're feeling. It's good for us to see what the people, even within our own community, to kind of gauge sentiments on things so we can see maybe we're thinking the wrong thing. If everybody's thinking one way or everybody's thinking another way, that can provide color to the situation. Now, we did get a bit of a basically bottom signal here, a short-term bottom, I should say, with this, because we had this here as well. W formation up, rejected. W formation up. Question is, do we get rejected? We do see stochastics rolling over. We do see the RSI has broken above this 50 line. This is only on the 1 hour chart, but we're basically hovering right in this 50 to 55% range, meaning we're not ultimately in a very bullish strength scenario right now because the RSI is quite low. We see right here, price action did bounce here at 34%. It came back up and it is rounding, looking like it may be trying to come back down. On the 4 hour, the VWAP is also rolling over. We have a negative money flow. We want to see this pop back into, in this case, the blue. We want that water. We want to water those plants so those plants will grow. We need capital excitement flowing into the space if we're expecting price action to move to the upside. Now, with that being said, we also can see Ethereum. Ethereum has a very similar structure here. If we draw option T, if we draw a bit of a trend line here, we're not anywhere near the upper level resistance in this case, but we are on both this Bitcoin and Ethereum. We do have a bit of a head and shoulders, but it's a wonky head and shoulders, inverted, of course. Similar structure though. Bears try, bulls bring it back. Bears try significantly more, bulls bring it all the way back. Bears try smaller, bulls bring it back. So we do have a scenario here that there is bullishness brewing underneath. And as I discussed in yesterday's live stream here on BitLab Academy, I did discuss the fact that there is a potential that this structure is being, I don't want to say manufactured, but in some ways influenced and manufactured by those market makers and those big money players trying to fuel the bullish sentiment to get people, especially if we break out of the zone, to get people committed to go long, to provide another opportunity for liquidity to the downside. And we can see this. Remember, we're talking about the 68 to 79, this region. What does it look like on the heat map? Well, on the heat map, here's 68. Here's the 69 area. And look at this. 68 is very clear. Now let's go and set 69, 69.3. This is where we're starting to see a lot of liquidations have piled up directly overhead. And in fact, if you look at this chart, we do have a pretty hot zone down here, basically at the lows that we recently had, 60,600. But the brightest color on this, the strongest magnet, you can call it, is up here in this 69.1 range. So when we're looking at this on the chart, we can start to see what area might have more of an impact. We do have this previous range high right here at 68,000, but we saw on the liquidation levels that this is not as hot. The range high of this area that we're really looking at is where I have this box right here, and moreover, the top side of this box, which we can actually move this up just a little bit. This is also representative of where the golden pocket is on this macro move, on this midterm move here from this top to the bottom. Golden pocket is right here at this 69.2. So we have liquidation levels at that level, 68,000, 68.2 to 69.2 to $70,000. We also have the golden pocket, and we also have these previous range highs. And if we drag this across, you can see range, basically a rejection here, a support here. Drag this a little further, rejection here. There's a lot of confluence with price levels as well as the Fibonacci's, as well as the liquidation zones up here in this level. So what we're watching for right now is what is the carryover? What is the strength? What is the breadth of the move? If this does break out of this, I would like to see on a move up some sort of pullback where the bulls re-engage and defend a level, basically not letting the price fall any further because buyers come in. And then in addition to all of that, on the next move back up, can we break through the doors here? Because we have two very key levels we have to pay attention to: the $69,000, $70,000 region, and then right at the $74,000 region. This is because this was the all-time highs, but we can't even talk about this until we break through this level. Now I see, where was it at? Jojo Gunn says, is Grayscale the big bear? I think there's definitely the speculative fear and uncertainty in the market right now is definitely driven somewhat by that with Grayscale, all those outflows coming. But there's other broader signals that are still very bullish, and we're going to go through some of those right now. Bitcoin, when bear market? We should not even be asking this question right now because historically the bear market has obviously come in after the peak of the bull cycle, which tends to be about 500. It could be between 300 and 600, but it's roughly about 530 days post halving is when we've gotten the bull market top. The halving was roughly right here. This was about 537 days, if I remember correctly. Similarly, the halving was right here. This bull market top was similarly in that 500 something days. The halving hasn't even happened yet. So the top is likely many months away. And in addition to that, the bear market will be following that, which is roughly about 14 to 16 months after the halving is when the bear market can likely start. So we've got a long way to go. And right now, the name of the game is patience. But so let's just remember right now, we see where the RSI is here. The RSI here is still quite low, respectively, compared to where the market cycle peak is. This does not mean that we're only going to go up from here. If you zoom out on a macro scale, it will feel like that. But when we are zoomed in to a 4-hour chart, even a daily chart, a 4-hour, 1 hour, 15-minute chart, there is going to be incredible chop along the way between now and whatever the bull market top is going to be. So let's utilize the opportunities, AKA the dips along the way. Even if we crashed from here 50%, that ultimately would represent a major opportunity to really take advantage of the coming gains in the next 12 to 16 months. So let's be bullish here. Let's recognize opportunity and dip and not get shaken out. Similarly, we can also see right here, this from Caleb Franzen, says Bitcoin is showing constructive signs. The 4-hour chart, 200 moving average cloud, which is the EMA and the SMA. EMA tends to move a bit quicker. The price fluctuates a bit quicker than the SMA because the EMA, exponential moving average, weighs, obviously, if this is a 200, the last 200 candles, but it puts more weight on the more current candles. So this moves a little bit faster. The SMA, simple moving average, averages the price of all the 200 equally. So essentially you're getting two dynamic sort of levels, and we can see they're actually converging here because there's a lot of consolidation at this level. There's not a lot of price movement, and we're bouncing once here, now twice here. Now, bullish RSI divergence we're also seeing as well. We can see we had a little bit one here, but also from here to this point, we're seeing the RSI have higher lows, meaning the strength isn't dipping as far, even though we're seeing a little bit of movement on the price action to the downside. We're starting to show some signs. Doesn't mean it's going to only go up. We're seeing some signs of support of a potential strong bounce. So let's just remember that. Now coming over to this chart right here, total 3. This is all the altcoins out there, basically everything minus Bitcoin and Ethereum. And what we see here is a very similar structure, very similar. We have a dip, dip, same thing, dip, dip. And with this is essentially where we're at right now. This is essentially a fractal. It's taking into account basically a mirror image of what the price action did here, and then basically copy these candle patterns, dragged over to here, just to give us an idea of what might be possible. It doesn't mean it has to happen, but similarity, regularity, a rhyme in rhythm in charts and price action happens on all assets. So if this is what happened last time, we can expect maybe something similar like this will happen. And either way, we did just break out of this bearish bottoming pattern here. That is a potential reversal back to bull. And we have broken through this zone, this neckline. So basically giant W formation, macro W formation on a monthly chart. And we have broken out of this. So 1, 2, 3 candles. Similarly, 1, 2, 3 candles. Are we going to get something similar? I think we will get something similar. The question is going to be, is there going to be any sort of diversion of capital from these altcoins because of all this capital flowing into Bitcoin? Or does this actually work in the inverse of that, where because there's so much institutional capital and now this mass adoption that likely will start to be ushered in over the next, really exponentially over the next year and a half, will we start seeing a lot of people also exponentially coming into altcoins, which I think we will? And will some of those profits that are being able to be taken from Bitcoin also roll into altcoins? I mean, back here, the total 3, all the altcoins barely basically clipped right through the $1 trillion range for the altcoins, not Bitcoin, not Ethereum, just altcoins. Are we going to get something here in the 3 trillion range? Are we going to get up to 5 trillion range? We're going to have to wait and see how the market is performing over the next many months to start getting a gauge of where the likely top can be here, because there's a lot of things that play with altcoins. And this is one of the reasons why Bitcoin and even Ethereum is a lot more risky than Bitcoin, because there's still not full established regulatory clarity about it 100% being a commodity. We're still seeing the debate back and forth with the SEC and Gary Gensler trying to determine whether or not, it seems like they're trying to re-sculpt it back into that securities narrative, which isn't going to be a death blow to the altcoin market, but it could have vast repercussions on their performance and uncertainty in those fields. So we have to make sure that we are aware that we are still taking on risk in the altcoin market. The fractals look great, but let's balance ourselves. Got 123 people in the room. Everybody hit that like button. Subscribe. Join us here in the family. It's a Saturday. We're dropping some alpha here. We're dropping what's going on in the market. And we got Crypto Birb on in a few minutes. If you don't know who Crypto Birb is, it's right here. His name's Adrian, but a friend of mine. He's been on my podcast and here on the channel before. He's just certified market technician as well. So he understands charts and markets beyond just looking at some TA. And he's got a great take. I got some great questions I'm going to be asking him, talking about where this market cycle is going, what's going on there. So in a few minutes, we're going to be jumping over to him and getting a little bit of a breakdown on what's going on with these markets. Now, coming back over here to these charts, the question about Grayscale. Here's a little bit of an update on that. We have been seeing some massive outflows on Grayscale, but what do we see here? 9.6, 6.8, 5.9, 5.5, 2.6. This is a downtrend right here. And essentially, think of this like money flow in some ways in the market, buying pressure. This went to its very severe dip, meaning sell pressure on the market because the grayscale was having so large of outflows. Now with this, these outflows have been slowly trending back towards zero, back towards the, not having these massive outflows. This has been diminishing. Now we also, on the same vein, saw BlackRock have huge inflow here, 6.7 Bitcoin, down to 1.1, down to 752, little spike here, 3,500, and then back only on Friday, yesterday, only up just under 300 Bitcoin. And we can see the net flow down here, minus 1,900, minus 5,600, minus 3,700, back down, minus 1,400. Now it's trending back here. So we're going to want to pay attention to this. Now, of course, the ETFs do not trade on the weekends. So this may give an opportunity for a bounce here that also may not follow through, because the institutional players don't tend to trade on the weekends as well either. CME futures are closed, and also the ETFs, they're not trading on the weekends either. There's more of the retail, all of us in here in the market. It tends to be slightly less volume on the weekends as well, or thinner order books. So it's easier to move price in different directions. So we're going to want to watch where Bitcoin closes this weekend at on Sunday, closes a weekly candle as well, because if the price action is above or below where the CME futures closed on Friday, we may have a gap above or below us. And I'd prefer to have, I guess it doesn't really matter, but we're going to want to watch if the gap is above or below us, because that could cause a little bit of a magnet and price action to return to that level. So if price action does push up on this weekend, watch for a potential price action coming back to that CME futures level on the market, following the market open for CME futures Sunday night. So we just need to pay attention to that. Similarly, also, by the way, if you're not following me, make sure you're following. There's a couple more fake profiles out there, so make sure you're following the only one and only Kelly Kellam profile, Kellam, Kelly, Kellam, and then of course BitLab Academy here at Academy BitLab. Now we talked about these liquidation levels. This is what we're trying to figure out, which direction they're playing the spread. So let's look at what's going on here. I've been talking a lot about this yellow line here. Positive spread, meaning the bulls are still trying to play the price action moving up and coming back to the VWAP moving up, coming back to the VWAP moving up. And we also see smaller momentum here, already a signal. Now we lose it, come back, reject, come back, reject. Now we've broken through and we've whipsawed up and back down. And now we're technically right now sitting above the VWAP. The question is going to be on this 4-hour candle. We have 3 hours left. Can we close above this? And can we also break, first step, not only this trend line, but also these candle bodies here at the 36. I would love Bitcoin at 36. These candle bodies here at basically 66.2 to 66.4. Because this is the candle body tops, these are the candle body bottoms right here. So this zone will ultimately be our first roadblock right here in this little gap of wicks. When we push up, if this is a trap, very strong trap, what we're going to see is price action push up into here and reject and come back down. We're going to want to watch that signal. If we're able to push up from here, pause for a second and break through, then the bulls are starting to shift into focus in terms of having the stronger buying power to really drive what's going on in the near future. As it stands right now, it looks like we're trying. Let's get to the 24-minute candle. It looks like we're trying to break through. We haven't yet quite done that yet. But look at this. Even on the 24-minute charts here with Bitcoin USD, we have the order block right here, this little shaded red box. This is telling us we have this hurdle and this hurdle directly above us. As it stands, we did have money flow on the 24-minute flip positive. We have the RSI and stochastics angled up, and it looks like the momentum is trying to expand. And look at all this bullishness right here. We stand a shot, but that does not mean it has to happen. So let's be patient there. Similarly, I did make some moves in my altcoin portfolio last night and this morning. Scrolling down here, let's go to where are we going? Total. So I sold one Ethereum, and remember, I have several portfolios. This is my alt portfolio, and I was thinking, okay, I'm very heavily weighted. It was my largest position in this alt portfolio. I took basically profits in some ways. I sold one Ethereum, and I split that Ethereum into Chainlink and Polygon. These are both. If we come over here and look at this watch list here I have, we see Ethereum's number 2, Chainlink's down here at 14, Polygon is number 16. And I do think Polygon is going to have more of an opportunity for larger gains while still being a very safe play in this bull run. And Chainlink, I think Chainlink's going to wake up in ways that we don't understand. And if those of you that were in the BitLab private member stream yesterday in the Discord with Josh and I, he outlined a very strong circumstance for Chainlink beyond it just being an oracle, but it being very, very heavily a very major player in the real world asset tokenization play as well, potentially even having some ties with BlackRock's integrations. But beyond whether or not BlackRock's involved, I do think Chainlink is something I wanted to have more in my portfolio. So rather than just putting more money in to Chainlink, I took some profits on Ethereum, rotated it into Chainlink and Polygon. So let's see how that's going to play out. So now I've got about 5,600. About 5,600 in Polygon and about 6,700 in Chainlink. So let's see. And remember, Chainlink, this is current holdings since I bought since we started this portfolio February 7th. Chainlink is under the value of where I bought it at. So this also allowed me to DCA into it and lower my average entry on that. Same thing with Polygon. I think the average entry before was like $1.11 or something like that. And I DCA'd, I actually put some more capital in last night, $900, and I took some profits from Ethereum and rotated this into Polygon. So if we come over here and go to asset allocations, we can see now the largest player in my portfolio is AVAX, and AVAX is going to be a major player in the RWA narrative. But then we have AVAX, Near, ETH, still a major player here, Link, Cardano, and Matic. So this is a majority. These are all major players, top crypto projects with incredibly strong basically ecosystems built on top of them and partnerships, all of these incredible things going on. The next one is Arrow. One of the reasons I also made the move was because Arrow was one of these that was in the top, and I like Arrow, but it had such a big gain that it jumped up into this basically upper echelon of holds on my portfolio. So that's why I made some of those moves. And we can see broken down by asset allocation. We got Ethereum ecosystem is 38%. We got layer ones, which is things outside of Ethereum like Cardano, Near, etc. So we have all very strong ecosystem plays as a majority of this portfolio. Then we have proof of stake, base ecosystem, smart contract. I like using coin stats for this reason. It gives you a lot of these data points. But one of the things we have to remember to check, and I'm curious right now, everybody that's here, it's a Saturday. Do me a favor, show some love. Look down below this video. If you have not hit that like button, if you have not hit that subscribe button, does it not say subscribed under this? Over 55% of you that watch, not once, but on a daily basis, are not subscribed. I don't know what I can do to make you subscribe. I mean, you're coming back every day. Hit that subscribe button. I'd love it if you would, and ding the bell. But when we come back over here, I have a question for you, and I want everybody to answer this question. When you do your portfolio tracker on whatever mechanism you're doing it on, are you laser focused on the dollar value of your portfolio, or do you come over here and come down and whatever portfolio tracker you do and track if you are gaining Bitcoin value or losing it? If your dollar value is going up and the Bitcoin value is going down, then there's better moves that you could make, because the goal here is to not only make money in terms of dollars that you could take profit on, but also you want to make sure if your assets are not moving as fast as Bitcoin, not on a daily basis, but over a period of a month or more, then you are probably misallocated. Things are going to run at different times, sure. But on aggregate over time, if the moves you're making in this market are not netting you positive growth in your Bitcoin allocation, even if you're just even if you hold no Bitcoin, if the value of your portfolio is not going up over time in Bitcoin value, then you're taking a massive misstep, because what's the purpose of being involved in the crypto space and wanting big gains if the biggest gainer or something, if Bitcoin is moving faster than the coins that you're holding over time, then you're taking higher risk for less reward. So just know that. Now, when we come back over here, let's go actually look down at Matic. We can see, let's go to the 4-hour time frame. We can just see some things I laid out here. And I did this based on what's going on with the weekly VWAP. And talking about the price action here, you see how we lose the weekly VWAP here. We come up, we find support, but we are still under the trend signal line. We try to push up. We still find support on the VWAP. We come up, find support on this VWAP. But then now we have this sort of inverted, we have this cup and handle right here. See this? And so on this dip right here, on the breakout of this zone, we have several conditions met. We are looking for not just, let me say this. When we're looking to take a trade, it gets exciting when we see price action positive. But price action positive or price action negative, if you're looking for a short, is not the signal for the trade. We want to use the stoplight action protocol, which is finding multiple different conditions for looking for the setup for the trade, a supporting signal for the trade, confluence with another supporting signal for the trade, and then your trigger to actually take action to take the trade. So when we're looking at Matic here, we can see the price action lost the weekly VWAP and the trend signal line right here. Got suppressed, actually broke through it. I want to take the trade. Patience, Padawan. We see it find support. Push it up, patience. We still don't have the setup. We find support here, and on the push up here, we have not cleared this previous high. We finally come down, find support on the weekly VWAP, and the trend signal line is flipped green. So now we have several conditions suggesting the setup. This was a setup right here, finally breaking through it. We're getting a little bit of a supporting signal here as this is finding support. But then on this move down and finding support here, now we have 3 different signals. And on this move up on price action, we now have a pattern here, this cup and handle, and we have a final sort of test here on the weekly VWAP, and we're breaking above this previous range high right here. So that would be your confirmation of the buy on this setup here. And then we have the price action move up. Okay, it fakes to the downside. That's not the signal. You want to break to the downside through this weekly VWAP, and then on the move up, do we shoot back through it or do we get rejected? The rejection is the confirmation. It didn't reject, so you let it ride. You let it ride. Oh, look, fake out, back up. Strong fake out, breaks right back through the weekly VWAP. Strong fake out again. Still, but we're not getting multiple signals. This continues on, even right here. Fake out to the downside, comes back up. Now, in this case, we have a couple things because we have this upper level of resistance, lower level of support. So we lost the VWAP and the trend signal line right here, but we bounced on the known support that we've already had established. We bounced on the known support, and we get this reversal signal here on the BitLab trading stack here on the BitLab intelligence. So we're pushing up, support. Now we have a massive fake out. We come back up, get a little bit of a hesitation, but on this dip, we're still holding this support here. And then all the way up until over here, again, look, fake out to the downside, back above it. And then here's where the confirmed sell is. Because here we have the price action breaking below the trend signal line. That's your setup in this region right here. And then comes into the weekly VWAP, and we get a candle following that gets rejected, and it's a bearish engulfing candle. In the midst of this as well, we see leading into this, so the stochastics, the RSI, the VWAP, everything is angled to the downside on this confirmation of a breakdown right in here. So using multiple different signals together gives you that green light, yellow light, red light, whether or not you should be looking to take a trade, if you should be sitting on your hands, or basically longing, shorting, sitting on your hands. What should you be doing? Let the data direct you on what you want, what you should be doing. Similarly, we have a similar setup right here. We got a rejection again, so still bearish trend. Now we have a W formation here, a bottom, potential, So this is a setup. We don't take this trade. We wait for the breakout of this neckline, which we got, and it broke above this weekly VWAP, this yellow line. Great. Now we're finding support here, but it's still being held hostage by this trend signal line. Now we're getting a little bit of a move up. We're getting a little bit of a move down here, which is finding support right here. So on the break of this level right here, if you are taking a trade on this, I'm not talking about buying a position for the next 14 months. If you're looking to scalp trade this, I would be waiting for a break of this level right here. And ultimately, I'd be a little bit more conservative and I'd be watching for this range low where this price interactivity happens, which is also the rejection point of here, and we're still under the zone. I'd be waiting for a price action move through this level, likely a little bit of retest, and that would be where the confirmed buy would be on this move. So using multiple different signals together, and one of the tools you need to utilize always is patience. See the setup brewing, wait for confirmations, identify the trigger. You have your strategy in place, you take the trade, and you can be consistent over time. And you always set a stop loss because that should always be part of your strategy if you are scalp trading or swing trading positions. Now, I think we got to talk a little bit about Arweave. I saw somebody in the chat asked about Arweave a few minutes ago before we started. So let's talk about Arweave. Arweave looking like it's trying to go through a little bit of a setup here. Now let's zoom in right here. We're on the 4 hour. Look at this giant W formation with a lower low here. But then on this dip, we got a W formation here with a higher low in this smaller time frame. Now let's look at what we want to look to. Look at this. Loses a weekly VWAP. Here's your setup. Here's a little bit of confluence. And then the rejection here is the confirmation. Rejection again back. Fake out to the upside, loses right back down. W formation. Now it breaks this neckline, and on breaking this neckline, it also breaks through the weekly VWAP. So there's your setup, a little bit of confluence, comes back and tests this level. That technically would be further confluence. And on this break right here of this previous range high, we're seeing a possibility of a setup for you to take a trade on this. Now there's a little bit of hesitation and patience I have right now with the market because of what's going on with Bitcoin and the uncertainty if this is going to go up or down. I would be waiting until Monday to take the trade because of we want to see if there's going to be a larger dip in the futures pricing. We're also going to want to see if the ETF outflows is going to remain strongly negative. So what I would be doing is two things. I'd be waiting on this level right here. Why this level right here? Because we have this range low bounce. We also have this rejection right in here. And we also have this order block directly overhead. So this is a setup. Yes, you're going to miss some of this move, but there's a strong possibility that we could come down and actually continue to the downside because on this 4 hour time frame, this is a downtrend currently. Why? All lower highs along the way, all lower lows along the way. Okay. Now with that being said, this is the area that I'd be watching a breakout of, this basically $40 level. Now, with that, we also have a bit of a broadening wedge here that does have a breakout already in play. So we came up, found support on the VWAP, rejection right at this level, found support on the VWAP, weekly VWAP here. Now we're pushing up. So this gives us a little bit more of a signal here that there is some bullishness at play. But on this move to the upside, we have this VWAP already angled back to the downside, and the money flow is still very negative here. So we're going to want to watch on a pullback, a test of this level directly below us, $36, about $36. If we can bounce anywhere above here and clear this gives us more likelihood that we're going to break this zone if we do push to the upside. Stacks also, look at this. We have this falling channel, which is a bullish pattern, breaks out. This is what I'm talking about. Comes back, tests the level, and then launches. So this is a great example. Price action, loses a weekly VWAP. See, rejection down, rejection down. Now we broke through the weekly VWAP and this upper level of resistance, and we came back and tested both of these and then launched. So somewhere in this region here would have been a great trade signal to take this trade to the upside. I'm talking about more scalp trading, smaller time frame trades. Now we do have what do we have here, everybody? We have another signal right here with the price action on this, with the price action on this asset, a bit of a diamond pattern, which this can be a continuation pattern or a reversal pattern. So as this stands right now, stacks and the BRC20 net and all things peripherally associated with Bitcoin, stacks has been kind of running while some things have been pulling back. So I'd be watching for a break of not only this little trend line right here, I'd be watching for a break of this and this previous top right here at the 375, 373 sort of zone. But there is signs of life in the chart. Quant still giving us, I'm going to clear this a bit. I was doing some private coaching the other day. And all right. So we do have a bit of an inverted head and shoulders here. It's ugly as it can be, but very sideways. So if this is at play, then Quant has a target potentially on a breakout here of up here. Where is that? All the way up here at 163. But let's not forget that we have this rising level of resistance that we can extrapolate to the outside. And it looks, actually, it would be a little bit tighter. Let's go to those candle bodies. It looks like this is a more likely target on a breakout to the upside here. But we can't just say it's going to break out and go here. We have these two order blocks directly above us, so we do have work to do to get there. We also have this top. We also have this top. We also have this top. And let's not forget, we always have to pull that fib, baby. Option F, come here to, Option F, to come here from top to bottom. And we see, look at this. Look at where we had resistance. Right here, this is a golden, let's turn off the volume. This is a golden pocket right here. We bounced up into this once, the bottom side twice. So on this breakout, we ultimately very quickly need to slice through this if we're going to remain bullish here. Likely come back to test this area and continue up. But there's signs of life in these charts. ONDO also having this move to the upside. Look at this. We have this downtrend level of resistance. Very similar to what we were talking about with the VWAP. Breaks down, look, rejection, rejection. Seems like we get two rejections a lot on these downtrends on in crypto on the weekly VWAP. But look at this, comes up, slices right through not only the weekly VWAP, but also this downtrend level of resistance. And then very basically chop move here, almost like a little bitty bull flag, and then a continuation of the upside. Now we actually have, I would call this actually, I'll do this a little bit more conservatively, a bit of a bull flag right here. Right? And so the target on this, and I think the RWAs are about to get a really strong narrative push because it's going to tie in the opportunity and the opportunistic mindset and the understanding of actually splitting the narrative from crypto and also just assets, right? We have Wall Street coming into the fray, and some of them won't even, they might be peripherally understanding of tokenization of assets. But when we start tokenizing these different assets, and it could be something as simple as financial products tokenized or actual real estate and other things, I think there's going to be a lot of capital flow into those sort of narratives. And Avalanche, which we'll look at in a second, is very, it's one of those layer one solutions, one of those layer one protocols that has a lot of awareness and building and partnerships already with that RWA narrative. So we're going to want to take a look at that. But the target on ONDO is all the way up here. This is one of those RWA assets. You can also find this on Coinbase. The target on here is up here, basically about 100% move, a little bit under that, up here to $1.30. And where did we get this at? We got this back here. Exciting. Came back. Oh my God, so scary. And now it's actually making that move to the upside. We had this bullish divergence on the BitLab trading stack down here. And then not only the bullish divergence, but a lot of buying pressure here, with is why these bars are green. We still have negative money flow, even though we have this bullish price action. So this gives me, I don't want to say hesitation, but I do note it because there's positive price action and the water's not in this market. But we do see the weekly VWAP has come down and is basically double bottomed here, likely trying to make a move back up. But we're going to need to have the RSI and the stochastics actually turning back up as well. So let's just pay attention to that. And the last one we're going to do here, and then we got to get to my boy, Mr. Crypto Birb. We got some great stuff there. I'll look at Injective too, Banju. Thank you very much for the chat there. Avalanche, basically this rising channel here, and we're just testing the bottom side of this a lot. This gives me a little bearish hesitation Because look at this, getting rejected at the weekly VWAP and trend signal line. Rejected again with lower highs throughout. This is suggesting a little bit of weakness here. We could have a flash down into the high 40s, maybe even below that. But if we can hold here and the market as a whole starts performing very well, like if Bitcoin starts ripping, we could see the rest of the market getting pulled to the upside as well. But ultimately on Avalanche, we're watching for the $56 to $58 region, which is where this VWAP is currently, which we have not been able to break through on this. And you see how we're getting sort of squashed into this zone? A breakout is coming either to the upside or downside in the near future on this. And the last one was Injective. And then we got, I can't wait to talk with Crypto Birb, share that with you all. Injective, look at this. Nice little resistance level. We're flirting with, some would say we've broken out, but regionally, we're kind of in the same zone. We want to watch what happens here because look, we did break through this trend line, but trend lines are always suggestive. But we also see this level of descending level of resistance, as well as this trend signal line that we're still being held under. And effectively, we can't be considering very much bullishness on any asset until this breaks through this weekly VWAP, which is at 37.7, because we very well could come back up into the zone, get rejected again. Also negative money flow still. So I'd be watching. This does look starting some bullishness though, with a little W there, larger W here, but this needs to actually start pushing up to form that W. So there are signs alive here. If this does get rejected and come further down, we could see a target down here to 32. Now, with that being said, I have to ask each and every single one of you, it is Saturday. If you're new here, let us know that you're new here. Welcome to the BitLab Academy stream. My name is Kellam. I appreciate you being here. We got a great conversation with the legend in the space, one of the most positive people in the crypto space. It just brings a wealth of knowledge to everything going on in this crypto ecosystem. Before we get to that, I just want each and every one of you to hit that like button, show some love. It's a Saturday. We're dropping some crypto love here together. And subscribe to the channel, ding the bell. And again, Mr. Crypto Birb, who's coming on here right now, this is his page. Make sure you give him a follow at Crypto Birb. He puts out a wealth of incredible content. And with that being said, let's go ahead and jump straight to Crypto Birb. He's very tied in with, not very tied in. One is an incredibly positive impact on the space. Has also been doing some stuff with the wonderful Gary Cardone, and so much is going on with the markets. It's good to get a little bit of a zoomed out perspective and say, where the hell is this market going? So with that, let's throw it to Crypto Birb and see what he's got to say about what's going on, because he is the legend himself.
Oh man, how do I get up? After such a set introduction, Kelly. Good to be on the show, and thanks so much for the kind, warm welcome, my friend. So we're heading to the Cardones, right? My good friend Gary Cardone, who lives in Tampa, and his brother Grant are actually celebrating the birthday, right? And they put out a very, very decent, thorough, highly admired party, with a lot of good people. And since, I have a lot of admiration for Gary, for what he does and for what he stands for, the values he brings, especially in the crypto industry, I just couldn't say no to that. And besides, it's actually a beautiful sunny day in Poland, which is why I'm wearing my glasses, kind of like not to get blinded by the sun. Second time after getting blinded in the Ape Fest last year. So there's a lot of good things been happening, and one more is happening even better since I'm on the show, man. So I would say, first of all, again, with as much admiration as I would always have for Gary, and before even knowing Gary, I had already known Grant, for his incredible skills, for the sales, his proper masterclass person for that. So shout out to both of them. Eventually, I think that Gary's voice is rising very, very strongly and fast, in the crypto scene, which is a good thing, because eventually having people like Gary, on board in the crypto gives a lot of credibility, a lot of good vibes, which are needed, because eventually, in the bear market, the crypto industry turns into a proper shithole, right? And they're like, this becomes a ghost town, like a proper echo chamber. And that there's a lot of personal kind of like emotional issues that a lot of people would have that we as traders, we cannot really ever fall for, right? Because eventually our job, as traders, as market participants, aiming to gain the financial gain out of that eventually, and to get a financial gain is us staying cool, right? Us staying level-headed, us staying basically, close to the ground, as close to the ground as possible, which in the actual phase of the bull markets, fully blown phase of the bull market that we are just starting to get in the third Elliott wave, if you will, of the bull run that started last November. I was very vocal about that. When we broke above $32,000, this is where we got this third wave confirmation. We got a first shot, 15,500 all the way to 25, right? To 32. We kind of like chopped around for 6 months, and we eventually broke out, right? So we got wave one, was the initial impulse, the motive wave, right? Sideways for 6 months, 25, 32, then actually broke for the third wave, which is exactly where we are right now, right? So those local kind of like short-term chops of 15%, like we got this like from 74 down to 61 right now, 15, 60, those are very cool, regular, healthy corrections. And well, I might be wrong. I'm wrong 50,000 times a day, ever since I wake up, anytime, any day. The thing that I've noticed, the thing that I was taught eventually is that the bull market corrections are buying opportunities much more than they are to get for selling, right? So having all the composition, all the aggregation with great people stepping in, the ETFs being approved, right? The central banks getting kind of like closer. There's like the official Basel Committee recommendation for central banks to invest 2 or more percent of their actual reserves into crypto assets, depending on the category, divided into different categories with properly adjusted risk measures, and how to calculate risks and exposure into crypto assets for central banks globally, officially accredited, recommended by the Basel Committee, supervising recommended body for the central banks. Well, by the next year, I think it says a lot about where we are, right? Global adoption is a case not only on the retail side. We got a FOMO from institutions. We got central banks stepping in. We got BlackRock, the biggest ETF provider ever, right? And got Larry Fink talking about Bitcoin and cryptocurrencies, a flight to quality, right? That the micro strategy is holding multi-billion gains, basically more and more purchasing, with the convertible notes lately. So there's a lot of depth in where we are right now. And the market seems to be slowly catching up, right? The retail is still empty, it seems, most of the time, right? This is nowhere near the bull, full-blown of mania, euphoria phase that we saw at the peak of 2021. Though we just broke all-time high. That's what it is, man.
With that being said, there's two things that come to mind immediately. And again, I want to thank you for being here, Crypto Birb, sharing your thoughts with us, because I've been following you for years. You've been a guest on my Crypto Answer podcast. You've also been here on BitLab Academy, and it's you're a wealth of knowledge. And there's so much going on online these days. With there's so much noise in terms of trolling, negativity, hate, confusion, disconfusion, misconfusion. And then we have people that are out here that I hope I can try and emulate people like you. And I hope I can try and emulate others out there that are trying to bring a positivity to the space, whether it's in God, whether it's in just humility, but rooted in facts and knowledge, and sharing facts about what we're seeing, about what we've learned. And, when I think about this as an analyst, I think about historical analysis, right? Looking back at previous trends. And so a lot of people are wondering right now, is this time different? How much do we use historical analysis right now when we have such massive capital flows? But in the same breath, it's like we need more capital flows either way. We would have needed them to emulate anything like previous cycles because the market cap's so much larger. So us being right around all-time highs and us breaking through it this time, we've seen in previous cycles that we've got, for instance, in the when we got up to $17,000 to $19,000 in the last cycle, we hovered there. We consolidated just under it and then had our breakout. And in this cycle, of course, we broke through it. But now we're sort of kind of chopping across that zone. Is this that same sort of historical analysis where we are mimicking that sort of behavior, but we kind of overshot it a little bit, maybe due to inflation? And that's one question. And the other, because we feel like we're running faster than we have in previous cycles, is this an indication that we may have something? And I thought this 7 months ago. And I'm very delighted to start seeing other people, even Willy Woo mentioned this, that we may have something that is a little bit more similar to the 2013 cycle, where we had two massive tops where, you know, one felt like the end of the market, pretty large, you know, sort of interim mini bear market, and then moonshot again. How do we look at historical analysis in the context of now that things are different? And what's your thoughts on that?
Good stuff, Kelly. So, you know, I always prefer not to comment on anybody else's opinions, because eventually giving my opinion on somebody else's opinion is a chain of, I'd say, you know, full detachment from actual facts and evidence, right? So I always kind of like jump into the facts. And the facts are that historically, you know, this is the fifth bull market. And the fifth bull market, not because I say so, but because a year ago, or even more than a year ago, when I was speaking with Kari, you know, all the posts that we did, you know, all the Birbness stance that we've had basically since the beginning of 2023, ever since the mid 13th January breakout over 19,500, which at the time was flattening 200-day moving average, which was flat after a yearly decline of the bear market. You know, there was a breakout, right? And when there is a breakout, I don't argue that, right? Since there's a breakout, it's already happened. It's a fact. It cannot be refuted. It cannot be undermined. It cannot be denied. And if the breakout sustains and it's confirmed, me being the market chart market technician, and it's confirmed by the volatility, by the substantial volatility increase, by the actual momentum increase, by the trend velocity, right? By the 200-day moving average direction, by the actual price increase. Let's say if the price of a multi-billion, you know, multi-hundred billion asset kind of like jumps 20%, like, it takes a lot of money to move it, right? Can it be an accident? Can it be someone fat fingered by 100 billion Bitcoin by accident? I wouldn't say so. Chances for that are, you know, fairly low. They are not impossible. However, you know, they are fairly low. There's always human error attached to it. So again, we're talking about the breadth conditions, right? As the crypto market improved overall as a whole, not only Bitcoin side, right? And those were the early signals that we had in 2023. And they are just continuing to persist alongside the actual rising trend, right? So me being, again, the trend follower, I follow the trend. I'm always late and always kind of like, always late to the party in terms of the reversals, because I wait for confirmations, right? I don't assume things. I don't try to predict things. I take a step back. I look backwards to what the actual trend stance is, right? And that's how I trade. You know, that's how let's say, make any guesses. However, guesses and trading are two different things for me, right? When I get a sense of the market, I take a look at the trends, and because trends tend to persist, right? Because of its irrational nature explained by the behavioral finance, because of our emotional and cognitive biases, because we feel overconfident, because we feel, you know, overly enthusiastic, because we feel overly happy and attached and endowed to the markets and to the bags that we have, we would go deeper and double down on whatever investments we would have, meaning very often that, you know, it just basically rises the demand per asset, flies, and then boosts the prices, and the prices go higher, right? So there is this persistence in the trends that comes from the behavioral stance, as well as from the fundamental stance that in the case of Bitcoin is driven by the Bitcoin halving itself, which is coming, drumroll, in 3 weeks, right, or so. So historically, again, facts, not my predictions, facts. Historically, every single halving brought incredible, massive monster rallies. We are talking 90x, the first halving, right? We're talking 30x, the second halving. We're talking 7x, the third halving, May 2020, all the way to the subsequent peak, right? So massive gains, 9,000%, 3,000%, 700%. I have no clue what's going to happen the next one. However, if the history is of any indication, and the bigger the sample is, the more indication it is, the more of a fair estimated value it becomes, and an expected value. And then, then I would say that there is a lot of reason to expect that this pattern is supposed to be positively maintained and retained over the time, right? So we are looking at an upward positive gain expectation post-halving, right? And that also comes with the fact that Bitcoin prices never came back to the previous halving prices, right? So anybody who bought into halving, they were in profit, and they were in extremely heavy profit for a very long time, right? So eventually, again, those are the facts. I cannot deny that. I cannot refute that. This just happened, right? And I just see the chart. The chart is available for everybody. You know, it's just going up in a cyclical fashion. 3 years of the bull market, 1 year of the bear market approximately. This ties up closely to the stock market for your cycle, stock market election for your cycle, as well as the Bitcoin halving cycle, which moves in tandem and aligns very well for this particular year as well.
I mean, I couldn't agree more with everything you just said there. You know, I think two questions that are either on people's minds or would really appreciate an answer to if they haven't even thought about it is, one, do you think that we're in a potential scenario with this post-halving going into this bull run when it truly kicks off? Do you think that we're in a scenario that we can meet or overshadow what we saw in the last cycle in the event that these capital flows do truly persist and increase and we start seeing mass adoption? Will we get a larger, like, rather than, because we've had a reduction from 90 to 30 to 7, are we going to maintain that and get 3.5 or something lower this time? Or could we get 7 to 12 or something different because of this other half of the multi-$100 trillion traditional finance world that is now woken up and are starting to wake up and has access? Do we have that super cycle potentiality here? And if not, do you feel like in the previous cycle, was it just cycle things? Or can we look at the last cycle? This kind of leads back into the first question. Was the last cycle cut short by that Bitcoin mining ban in China? Like, how do we contend with this when we're looking and trying to project into this cycle when that did happen, but was it an anomaly?
Good questions. I wish I knew the answer to that, man. I have no idea. I have no idea for the particular reason, for why the cycles turn out the way they are. That the truth is that the future is full of entropy, it's full of chaos, it's full of this inherent disorder, that we cannot just predict, because at times just, this butterfly effect happens, something snaps, right? Someone sneezes, and on the other side of the planet there's a hurricane, and in this unpredictable chain of events, basically it comes out that Bitcoin just goes up whatever the amount it goes up typically, right? So like I said, there was a lot of unpredictability that at any time, as I call this, we have this subjective ignorance, right? We're objectively ignorant. We cannot know every single thing that exists in the real time, right? Which means that we deal with uncertainty, and when we deal with uncertainty, we make irrational choices that very often, accelerate the price movements because we buy out of fear or buy out of greed, right? That is typically oversteering, and overstimulated against what we do as if we were rational. So all those swings, translate to a lot of unpredictability, to a lot of irrational, right, movements, to a lot of irrational exuberance at peaks, to a lot of irrational fear at the bottoms, all right? And that's typically what translates that Bitcoin typically goes higher than everybody expects and lower than everybody expects in the bear markets, right? So because of that, again, whether it's going to go 3x, I have no clue. Maybe it's going to do 1.5x, from the halving. It's already done, basically, 360% of the bottom, if I'm not mistaken, from 15,500 all the way to 74,000. That's an incredible record, right? The people I advised to, back in the day, back in 2022, back in 2023, the national football players, for instance, there's my good friend Michał Pazdan, who's an excellent Polish football player. We just met a couple of days ago, and he says, "Hey, listen, I'm up 3x on Bitcoin, right?" And that's good. That's congratulations, because that's exactly what Bitcoin does to those who actually hold on to the persistent trends, right? And that was the main premise. Since I don't argue the numbers, I don't argue the evidence, I don't argue what I see in the charts. And it's not even what I see in the charts, it's the system that tells you, okay, this is an anomaly that is worth watching, right? This is some abnormal breakout, for instance, abnormal volatility for us, right? Perhaps it's something to take a look at, right? And eventually, again, that coincides with the stock market presidential election for your cycle, which in last year was a pre-election setup, and historically over 80. That was ever since 1939, if I'm not mistaken. There was only one losing pre-election year, right? Only one losing pre-election year ever since 1939. right? Out of, again, might be wrong. I think it was 20 pre-election years at that time, ever since, right? And basically, well, that's what it did. Bitcoin went up 160%, right? Stock markets pulled off new all-time high, S&P new all-time high, Nasdaq new all-time high, and so on and so forth, right? So there is this inherent pattern that comes that comes from the fact that, well, not because we say so, not because we think so, not because we kind of like materialize our feelings. It's more that, well, it's all tied up, for instance, to weather, right? The weather impacts the seasons of the year, impact the seasonality and what's happening on the, on the food market, right? On the crops, on the wheat, all and so on. That in turn correlates with what's happening in the other kind of like demand and supply shortages, and translates to the expense of the currency, for instance, right? So there's a lot of facts that kind of like tie up all together in the correlated fashion. And in that context, having such a strong pre-election year, my good friend Jeff Hirsch, right, who is the godfather of seasonal studies, last September 26th, we put out the actual first ever Bitcoin seasonality article that was created by me and by Jeff Hirsch, who is the actual literal godfather of seasonal studies, right? Jeff Hirsch and his late father Yale Hirsch, 7 years ago, they put out the first framework and started noticing the patterns, that the January barometers has something to say, right? That there is this actual Santa Claus rally pattern that has something to say, that there is the seasonal abnormal effects and outcomes that, for instance, turn out to be, some seasonal strategies to play. And Bitcoin over the time, has gained much more correlation and tied to Nasdaq, right? And Nasdaq performs with the best 8 months and worst 4 months strategy, where November through July, you actually see that the market performs far better than for the most of the year, for the remaining part of the year, right? For the remaining 4 months of Q3 and so on. Bitcoin is the only kind of like, Bitcoin is being so closely tied up to Nasdaq, and Nasdaq being so closely tied up and correlated to the stock market presidential election cycle. It all kind of like comes together. The 7-week correlation coefficient with S&P 500 is at 0.92 as of yesterday. This 0.92 ratio on the correlation of Bitcoin to S&P, and even more strongly tied up on the long-term basis to Nasdaq. So Bitcoin follows and behaves like a more volatile beta version of a Nasdaq stock, right? That's a thing. Another thing is that it follows very similar patterns for the best 8 months and for worst 4 months, throughout Q3, where people go on vacation, take time off, they don't support as much buying volume as possible, as it's typical during the other months of the year. That all translates to a lot of demand in the anywhere between, basically, again, October and June, July, all right, translates to slowdown in typical corrective period in the Q3, with September being the worst month on the record, minus 6.5% gain, right? And those are the facts. And since they are the facts, I don't argue them, and I just make money off of it.
Yeah, I mean, so much to unpack there. I share that a lot. There's a correlation. I don't know if you follow the Rational Root at all. He's got a great platform that he's developed called the Bitcoin Strategy Platform. And one of the metrics he has in there is two of them that you just spoke about. One, whatever season you're in, the seasonality, he basically breaks down the Bitcoin chart and shows you what the market was doing in that season, and the whole period of the chart. And the other one is correlation between S&P 500 and Bitcoin. And I think all of us at some point or another, even if it's only for a minute, we all have this idea at some point, because we are hopeful about what Bitcoin is, what it can do, and the development in terms of the adoption rate that is surely to come, and this persistent sort of desire for it to be a hedge against everything, right? And yes, it has performed incredibly well over time. It's outperformed everything, but we also see a persistence and its correlative factors with traditional markets. Now, we did see in March of last year, when we had the cascading bank failures, Bitcoin pushed up. Some want to argue it happened because banks failed, and this was the breakout point. This was the difference. On the other hand, you could also see that we were already starting a bull trend. So who's to say what it was for? So my question here is, are we still too hopeful that this asset is its own asset, but are we too hopeful that this asset is that other asset? You know, how do we, is it just going to be hindsight 3 years later that we're going to see, oh, this has fully broken away? Or are you starting to see signs, because we still have stiff correlation with a lot of these tech markets and risk? When do we sort of identify that this has broken away into started forging its own path?
All right, perfect question, Kelly. And mine to kind of like wrap slowly because I have to run for the plane. However,
yeah,
for the closing thoughts, you know, I would say that the correlation is a fact. Whatever we think about that is a, you know, whether we like it or not, it is what it is. 7-week correlation is at 0.92, which is very strongly positively correlated, which means that Bitcoin is not any sort of like a hedge, is not a means of diversification to the stock market as of right now. Okay, that's a fact. We only diversify with negatively or not correlated assets in order to diversify, right, and distribute the risk allocation. So that being said, again, decoupling or not, you know, it's all dynamic. It changes. At times, the correlation of Bitcoin against S&P 500 is negative, and it's strongly negative. So multiple times we had, you know, situation when the correlation goes to -75, -90, as well. Right, when the stock market and the Bitcoin move almost ideally in different opposite ways. However, most of the time, at least in the last year, ever until now, you know, it's basically showed that it's typically aligning with the bottom conditions, with the market bottoming out up to some period of correction. So the correlation goes strongly negative when we have the corrective period. So all that, again, regardless what I think about that, it changes. You know, it changes. It is present. Most of the time, it's very strong and positively correlated to stock market, which means that there is no talk about decoupling or any sort of like things like that. And one final thought, closing thought, is that, you know, we need to invest in educating ourselves. We need to invest in learning. We need to invest, instead of spending money on shitcoins on leverage, we need to invest in our own education and the books, in the reliable, credible papers, facts, right? Learning to respect the fact is exactly what makes money. Learning to follow opinions is what loses us all the money. And that's let it be the final closing part on my end. Thank you, Kelly.
Well, I appreciate you. You know, rapid fire right as we leave. 100K, is it going to be a hurdle, or is that the starting point?
Probably, you know, magical barrier. So at first might be a little bit of a slowdown around that area. However, it shouldn't be too difficult eventually to go past.
That's a good sign. You know, I think 100K is going to be a wonderful marker in this space, and we got a lot of stuff to got a lot of this dragon to ride. So I appreciate your time with us here, everybody. You can find Crypto Birb on his socials at @crypto_Birb. He's got a wonderful, you know, we have BitLab Academy, but nobody here is competing. Crypto Birb and I and other people like us in the space, we want to make sure everybody out there, wherever you get tools, educate yourself, get tools, check in with us. And Birb, I hope you have a wonderful flight, and look forward to seeing you at some point. Are you going to be at the Bitcoin conference?
No, I won't. Thank you, Kevin.
Well, at some point I'll shake hands with you and have a beer in person. I should be over in Europe, I think, in May. Maybe we'll run into each other. Go catch your flight, and I hope you have a wonderful time. And everybody, make sure you give him a follow at @crypto_Birb. Thank you very much, good sir, and we'll see you later.
God bless you, Kelly. God bless everybody.
Now, everybody, if you just saw, Crypto Birb has such a wonderful broad take on the market, what's possible, where it's going, and also reining yourself in. We can be hopeful. Let's be hopeful, but let's also root our hope in actual strategy and understanding that this market can do whatever it's going to do. We never know what the impulses are going to be. We never know what the stimuli are going to be that are going to impact price go up, price go down, price go sideways. Because especially right now, everybody's just asking up or down. Price can go sideways. In previous cycles, we've had multiple month periods, months, hundreds of days where prices just chop sideways, maybe within a couple $100 range in previous cycles. Even early last year, January, into once we had that first rise up and the first sell-off, The price actually, if you look at it, had a $7,000 sideways range where it actually was trading sideways within a $7,000 range up, and then 20% move back down, then $7,000 range up. So the point here is you need to make sure that you understand where you're at in the market cycle. And as much as we want this to be a hedge against inflation and a hedge against markets, it's still very heavily correlated and tied to what's going on with the stock markets, S&P 500, NASDAQ, as well as what's going on with the risk narrative. Now, everything still feels like it's on a razor's edge right now with what's happening with monetary policy. Are we going to get money printing? Are we not? Are interest rates going to be cut? All you can do is have your plan outlined ahead of time, know what your time horizon is, and stick to your plan, because there's going to be fireworks, surely. The question is, are you going to be around with the right amount of capital, the maximum amount of capital, so that you can actually capitalize on these market movements? I fully support people trading, but trade with education. Educate yourself before you just jump in with your life savings. And also make sure that you are doing it with an allocated portion of your portfolio. So you're not trading your entire life savings. You're not trading your entire crypto portfolio. And as you take profits along the way, I always recommend what I do. It's like when I worked on a fishing boat, when I lived out in Hawaii, I worked on my uncle's fishing and sailboats. We would put, 30% of the excess money, the tip money, all that extra money, we would split it three ways. 30% went to the boat, 30% went to the captain, 30% went to the deckhand. Similarly, think about your portfolio that way. When you take profits, when everybody's talking about taking profits, it doesn't mean to exit the market. Put 30% into your long-term held portfolio that you never touch. Your big, primarily Bitcoin and Ethereum. Harvest profits into those and hopefully more heavily weighted into Bitcoin. Put 30% in stable coins. So it's dry powder. Maybe take, it doesn't need to be 30%, but some amount of money that you take off the table, that you impact your life in the real world. So it's not all just for numbers on a computer screen. That's what we're here to change our lives. We're here to make sure that we can improve our families' lives and be a better asset to the communities that we live in. So let's do that. Let's make sure we take care of ourselves. And we do that through making sure that we take care of our portfolio and making sure we find balance. That's all I got for you today, everybody. And cutting back here into, before we actually go, I wanted to talk about Bitcoin making that move that we just talked about, actually breaking beyond this zone. And look at this. Bounced right on the trend signal line, came up just like we were talking about, sliced through this descending level of resistance, and actually came back. This is a 24-minute chart. Came down, found support here, and then moved to the upside. Let me go ahead. Okay. Yeah, there we go. And starting to move to the upside. And we want to watch these levels that we've already marked out at the beginning of the stream. If you want to see a lot of the chart breakdown, go back to the beginning of the stream. If you tuned in late, we broke down Bitcoin and Ethereum and INJECTIVE, AVAX. What else did we cover? We covered quite ONDO. We covered quite a few, Arweave. We covered quite a few coins. But we want to really pay attention to price action getting above the 66.4 level and ultimately getting up here between the $68,000 and $69,000 level before we really start getting confident that there's a strong continuation of a reversal at play. And also, I saw somebody asked about NEAR. NEAR is basically sitting on the precipice of potentially making a strong move to the upside. We have this sort of trend line, which is going to be very ugly. But essentially this zone, not a specific price level, but this zone basically really right now it's trying to ride this trend signal line. If we can break up beyond basically $6.80, another 10 cents up, 10 cents up, then I think that this will be making that move towards the upside. And we do see that weekly VWAP is all the way up here. So we're ultimately still very bearish until the price action can get up here, test this level about the 715, 713 level, and then continue to the upside. Markets are feeling good. They're looking good. Even if we get rejected at these levels and we break back down, we have it all mapped out. Again, go back to the beginning of this video, watch through it. We'll put the time codes here in a few minutes. I love you guys. I appreciate you all. Hope you all have an absolutely wonderful weekend. And if you want more, if you want to figure out how you can get involved in our premium community, make sure you head over to lab.bitlabacademy.com/Josh. Again, that's lab.bitlabacademy/Josh. bitlabatrading.com/Josh. And when you sign up here, make sure you check your inbox and your spam folder. And you will get an email. And if you don't see it, check your spam folder. It has 2 steps and it will automatically add your access to those premium channels where we're doing private member streams. We're doing basically setups, watch lists of, specific coins of the next narrative that may be pumping. I'm sharing breakdowns of what's going on. And I talked about it at the beginning of this episode, some moves I made in my altcoin portfolio that I'm looking for a little bit more risk that's still balanced. We share all this, trade setups, so much going on in here, specific call outs, exactly what we're looking at. So get involved there. The link will be at the very end of this screen, on the end screen of this as well, but I will share this in the live chat right now. It's a free trial for 30 days. There's a link right there in the live chat. Again, it's lab.bitlabacademy.com/Josh. That's the #1 way you can help support this channel and also make sure you can support your success because we got the community, we got the signals, we got the tools, we got the resources. And with that, I hope you all have an absolutely wonderful day. And before we go, we got still 170 people here watching live. Before you go, it would be my honor and my delight, especially if you're new here. And if you've been watching multiple days in a row, look down below this video. You might not realize that you're not even subscribed, maybe because you're watching so often. Look below this video. If it doesn't say subscribed, hit that subscribe button, hit that like button, ding the bell, and let's go ahead and get this going. You all have an absolutely wonderful weekend. And with that, I bid you adieu. Adios, muchachos. Thank you for coming. Thank you for always tuning in. See you guys in the disco, baby. Adios.